hello to you. Warm welcome to the CWJobs breakfast briefing, and thank you very much to Richard Knott for inviting me back again this year. I'm here to talk about the big trends in mobile commerce. Please give a very warm welcome to Michael Nuciforo. Welcome.
So wow, what a big year it has been in mobile, and I think last year I would have definitely had up here mobile is coming, but this year, thankfully for me, being in this field, mobile has finally arrived. And I think the fascinating thing about mobile is the disruption it's caused to everything that we do. And it's from the way that we connect, the way that we communicate, the way that we research, and also the way we kill time. And I think you look at how people are using mobile and the context they're using it in, whether they're sitting on a train or they're waiting for their girlfriend to try and close in H&M. And mobile has become an extension of us. Everything we do, we use our mobile for. And I almost think of mobile now as our sixth sense. So I will use it to augment basically any decision I make. So I used it this morning to work out how to get here. I might use it later today to work out how to get somewhere else. And what mobile's doing in a banking context is fundamentally changing the way that consumers are interacting with their bank. And we're starting to see those behaviours now in terms of the volume of transactions being done through the mobile channel. And this is really just the beginning of where mobile's going to be. And if you look over to Asia, if you look over to the US, in a slightly more mature market, we can really start to see how those behaviours are changing the way consumers are adopting financial services. So one of the things about mobile is that it is touching every single industry. So what we're having is that every single endeavour, every single business, every single job is being touched by mobile. And we're seeing a lot of activity through gambling, we're seeing a lot of activity even in health, in transport. And what this means is that there's an opportunity for recruiters to look beyond the traditional bank experience person. So a few years ago, banks only hired people with banking experience, but now they're looking and they're expecting and they're embracing people from other industries. And what recruiters should start looking at is that in terms of the way they've structured their business, I think traditionally people might have had someone in a banking role and engaging with someone in a bank. But broadly now you need to look at the skills that those people have. If they've got skills in payments, if they've got skills in mobile, whatever industry they're from, they can all help out in terms of the mobile commerce experience. And a lot more roles in banks now are starting to be filled by people who have experience working in the transport industry, working in media. And that's going to continue to grow. So recruiters really need to embrace that change. In terms of mobile banking specifically, there's a lot of growth around bringing in people who have nothing to do with banking. And because people want that different insight, that different experience, probably an industry where there is more innovation going on. And some of the more successful hires I've seen over the last few years have been from people who have no experience in banking. And that's because they've been able to bring a totally different attitude, a totally different perspective. And banks are starting to realise their old operating model, their old way of working, the very risk-averse way of working, is no longer going to succeed in this new world. And they're really worried about mobile. They are stressing out every single day about what to do with mobile. They're worried about the disruption. They're worried about new competition. They're worried about new startups coming into this space. And if you think about it, if I can get this over, basically this whole new app economy has emerged. And this economy is starting to grow at an exponential rate. So more and more people are moving into this field because they have confidence in it. They know mobile is not going away. It's not an industry where it might be big for the next year or so. It's an industry that's going to be big for the next decade at least. And mobile is going to be this weapon of mass disruption over this next decade. And more people are going to embrace this. They're going to start to move into mobile. They're going to start to take their skills from elsewhere. They're going to start to want to get involved in this because there's so much excitement. And more importantly to these people, there's investment. So they might have come from a different role in the past where they got frustrated or bogged down in the fact there was no investment. But in mobile, they know there's going to be investment. And banks are allocating a significant proportion of their investment over the next few years into mobile. And they're starting to take it away from the traditional channels such as branch. Even online banking is starting to plateau in terms of the investment going on in that area. Where we've ended up now is basically we've got to this point where we've got consumer demand, we've got technical capability, and we've got this amazing amount of competition going on in the industry. And where this has led us to is that there's a lot of people doing things that they haven't done in the past or wouldn't consider themselves in terms of skills. But what we're seeing is banks are starting to realise they need to work closer or become telcos. We're seeing telcos becoming banks. So O2 have launched their wallet just as well as banks are. They're all worried about mobile payments as well. But interestingly, we're seeing this from the top, and it really is coming from the top. These tech giants, these behemoths from the US, embracing financial payments as well. So your Googles, Apples, Amazons, etc. And the interesting thing here is that consumers are often establishing their first relationship. So digital natives or kids who have grown up only with the internet are establishing their first brand relationship with those providers, so with their Googles or their iPad that they're playing with when they're 5 years old. And kids are also now starting to get their first phone at around 10 or 11. So they're actually starting to have their first relationship with someone that isn't a bank and someone who is wanting to play with that financial services space. And the brand equity that those brands are building up with those kids from a young age means they're a very serious threat over the next 5 to 10 years. So when I was growing up, I just expected to get a bank account with an established bank when I reached sort of 16, 17. But kids today are not going to be thinking that. When they get to that age and they've been using their iPad to download Disney movies, they're going to start using their iPad to buy Disney tickets when they get to that age. And we're already starting to see those behaviours. So kids who are sort of 10, 11 years old are acting very much like their parents. They're very mature in their behaviours online and in mobile. And they're basically at the moment just borrowing their parents' cards. But when they get to the right point, they will have their own accounts. And they will probably totally bypass that whole banking industry. Interestingly as well from this perspective that when you talk about how telcos are becoming more like banks, banks are becoming more like telcos, there's a great opportunity for recruiters in terms of moving people into those different industries. So people who may have had experience just working at a telco, perfect for the bank. And I know banks would really love to have that type of knowledge in-house. And same from a bank payments perspective, the knowledge you build up in a bank around regulation, around security and risk is very appealing to the sort of telecommunications industry. So what we're seeing in from a banking perspective, and I put this slide now, the size of the circles indicates the importance of these channels to customers. And on the X and Y axis, we've got the number of service transactions and the number of sales transactions done in these channels. So today in 2012, the most important channels to customers are online and branch. And mobile's starting to play a more increasing role, but it's still not there. It's roughly around 10 to 20% of activity, also 10 to 20% in terms of the number of customers using it. But by 2015, that's going to fundamentally change. And mobile is going to become the most important channel. And most interestingly, it's going to become the biggest in terms of service transactions, so payments, etc. And also, I guess, controversially in terms of sales. And traditionally, people never quite got their head around people taking up bank products through a mobile. They thought people want face-to-face interactions. But I think ask yourself this, if there's anything that you can do online or through your mobile, you'll do it. And in much the same way, banks will start to do more sales. It's just a logical trend. As more people start to transact in that channel, gaps will emerge in sales in terms of how they do sales today in a branch. So they're going to start rotating or delivering capabilities for sales into their mobile applications. And there's a big opportunity there for banks because essentially the way we use our mobile is in context of the situation we are in. And so if you think about it, you could be looking at a property, you could be purchasing a car. And the bank can use that location data, it can use the data it has about you as a customer to promote a relevant product in the context of you in that time. So wouldn't it be great if you're looking at a car and you get an offer for some great car insurance from the bank? So we're going to start to see more and more of that happening, and most banks haven't got that yet. They've just really focused on getting that service capability and payments, etc., into their mobile banking services. In terms of what that means for the branches, we are going to start to see a decline in the number of people working in branch, not necessarily immediately, but that will start to pick up in sort of 18 to 24 months' time. That just will not be the volume of transactions in those areas. And banks are going to have to evolve their whole operating model to do this. So we're going to see a lot more roles, obviously, with mobile in their title. We're going to see a lot more teams built around mobile. And just internally, in terms of the psyche of banks, there's going to be a lot more people understanding and dedicated to mobile. So your risk guys today, or your security guys today, who might not know that much about mobile, are going to have to become experts over the next few years. And traditionally, those people have sort of stuck to what they know, and they've done a great job in terms of working at the branch or working even on online now. And they're a little bit nervous about stepping into mobile until they build up their knowledge. But there's no hiding from the fact that those roles, those sort of BAU roles, need to be able to support the growth in mobile channels as well. So we've got Jane here as an example. Now, Jane's a teacher and she loves her new mobile service because it's very convenient for her. And she loves shopping with it. And as Dave touched on, we're going to see a big transition, I think, or I hope, within banks in terms of working more closer with retailers and merchants. I think essentially they need to, because both of those industries are being disrupted, and I think if they can come together, there's huge benefit. But what Jane can do is she can get out her app and she can take an image of the TV that she sees in the storefront window. And this image recognition capability identifies the TV and tells her the best price available from a number of different retailers. And I know a lot of people are starting to use these sort of price comparison apps. The app then tells her which account has the available funds, and she can purchase instantly using her mobile wallet, so the goods are delivered the next day. Now, what this means is that banking is going to evolve away from this set of customer-initiated activities, or reactive banking, as I like to call it, to proactive banking. And it's all because of the mobile. It's all because, for the first time, banks have a communication tool that's with that customer 24/7 or anytime, anywhere. So if you think about banking over the last century, or mobile or commerce over the last century, you've probably interacted with your bank or your retailer once every fortnight, once a week. But this particular channel has changed that. So the volume of transactions we're seeing through mobile has gone through the roof. We're seeing most people log on 20 to 30 times a month. So every single day, basically. So you've moved that interaction from once a fortnight, once a month even, for a lot of people in terms of, 10, 20 years ago visiting a branch, to once a day. And banks haven't quite got used to this yet. They're not actually quite adjusted in terms of how they're going to utilise this frequency of communication. And they're not actually doing that a lot. But banks are starting to talk about how they become more proactive. So in this instance there, the bank's been proactive in letting Jane know about better prices. It's also let Jane know about an account that has the available funds that she can use. She doesn't have to think that all through herself. It's all done for her. And this proactive banking is going to drive a lot of new roles in the banking industry over the next few years. People who are specialists at understanding the data or the transactions or the customer and providing the information. And this is all going to be through automated systems that understand you and therefore promote the right information to you. In the next example, we've got Sam. So Sam, I'll put it down. So Sam loves, on it, that's right. So Sam loves his mobile app because he actually gets rewarded for using it. And this is an interesting proposition as well for banks. So Sam is able to receive an alert. So based on Sam's recent transaction history and his location, the bank realises that there's a belt that's available in the store at a good price. So it lets Sam know through a notification. Sam can go in there using his NFC-enabled device. He can tap and go at the counter, and away he goes. But the best part about this is that Sam actually gets rewarded when he shares that offer with his friends. So we're starting to see this view that banks need to create this ecosystem with retailers, whereby they're rewarding their customers. Because when you think about banking today, it's very difficult to differentiate yourself. Most banks have similar services, especially in the mobile. Most banks offer the same breadth of functionality. So banks are going to have to start differentiating themselves through different avenues, this being one. So they're going to start looking to reward you for your behaviours or how often you interact with the bank. And this is actually called gamification. So gamification is trying to encourage certain behaviours in your consumer base by rewarding them for certain things. So it could be that because Sam logs into his mobile banking app every single day, he doesn't have to pay his £5 monthly account fee. Those types of things, because banks want to start driving that behaviour. They want to take those high-cost transactions out of the traditional channels and move them into mobile. The thing that a lot of people do with mobile is they actually just think about it from a consumer perspective, but we all work, and mobile is equally going to have just as big an impact on the way we work. So for mobile today, we're starting to see a lot of people embracing bringing your own device to work, embracing email. So the amount of people checking their work emails on their mobile is just growing phenomenally. And what this means is it's also changing our day-to-day behaviours around work. And we're going to see this new way of working be embraced, different by different industry, different by different organisation, but by and large, we're starting to see people becoming more flexible around their work patterns. And the traditional 9 to 5, 9 to 6 working day is being replaced by small blocks of time. So you might get up in the morning and do some work and check your emails from 8 to 10, go in, have a coffee, catch up with some people. Then after lunch, you might go on again for a few hours. And interestingly, a lot of people are then doing some work after dinner, so when they get home. And mobile's allowing this flexibility. It's allowing people to if your employer is willing at the moment, to do the day-to-day errands that you just couldn't do in your 9 to 6. It might be picking up the kids. It might be paying something at the post office, for example. And this type of working relationship is going to, again, drive greater efficiency. So what this means is that these organisations like retailers and banks have to invest less in not only the devices but the property that they have. So these organisations have a huge amount of property that supports these massive amounts, big teams. And what this means is more of these people are going to be able to work from home, and that's going to cut costs for them. Within this whole sort of app economy and the changing face that's being brought about by mobile, there's a huge amount of opportunity. So we know already that there's sort of well over 30,000 people employed in this specific industry, if not more, and I think it's sort of already at about 40. And this is going to double by the end of this year. We're going to see more and more people embracing mobile. And for recruiters out there, I think it's a case of trying to find the right people with the soft skills, not necessarily the hard skills, because I think there's going to be so much competition, there's going to be so many opportunities out there for mobile roles that you're invariably going to be having to bring in people who may not have experience specifically in mobile, but have experience in innovation or a specific skill set that mobile embraces. And what this means is that you need to really attack that. You need to try and target the right people that are willing to make this switch over. So I think it's important to look at the different types of people who are starting to embrace mobile. And we've sort of got these three high-level segments that I've identified. So we've got females under 34 are starting to get heavily interested in mobile, and that's because they use it a lot. Females use mobile more than males, and we see that consistently. We see that through Facebook, Pinterest. We're seeing a lot of purchasing done by females through their mobile. And then we're starting to see sort of people coming to the end of their high school, maybe entering university. A lot of these people are so excited about mobile because they are fans of it. They've grown up with it. It's their sixth sense. It's something they've been using ever since they were 10. And what they're doing is they're not necessarily thinking about a traditional career path anymore. So there's been a lot of great work done by the UK government around establishing the sort of Silicon Roundabout area. And these people are now starting to look at how they can enter that directly, how they can go straight into a startup. So there's a big opportunity around sort of 18 to 24-year-olds who may have been working in a startup business, maybe around mobile, maybe around something digital, and they might be interested now in moving into a more sort of sophisticated career in the form of, higher earnings and a bit more stability. And I think some people, embrace that initial startup culture because it sounds very exciting. But once they're actually working in it every day and there's a lot of change and there's a lot of uncertainty, I think you can attract a lot of those people into a bank now, because they can see that there's investment going on there and there's a lot of exciting competition that's going to go on there. So I think it's very important you start to look at that sort of startup demographic and see if you can get them interested. And obviously people who have experience but are starting to see the amount of excitement around mobile and they want to enter that space as well. And again, you really want to look at the soft skills. So what I wanted to do is, in terms of wrapping this up, is just go through a couple of the key types of skills that are well suited to mobile, I think, that are going to help you guys out. So Agile. So Agile, for those who aren't familiar with Agile, is a form of delivering software. And Agile, for those who've worked in it, is a fantastic way to deliver and build mobile applications because it allows you to touch and feel the product as it evolves. So the traditional way of working in commerce was you would do a big document and write all your requirements, and it might be 50 pages. No one really read it because it was too long. And then hand that over to someone to build. And in that period, a lot of things would change. And I think those changes were frustrating, but by and large acceptable. In the mobile world, they're not, because it's so difficult to translate something that's written down into how that experience should be on a mobile. Think about when you click a button. Generally, that button will change colour, or how the screen changes when you interact with it. Does it flow to the left? Does it flow to the right? Does it appear from the middle? All of those things are very difficult to document. What Agile does is it brings the person with the business idea or the requirements side by side with the developer, and they can actually work and discuss those interactions, those behaviours side by side, and ultimately deliver a better product. This also ties back into the fact that, as I said earlier, you're not going to win on the breadth of the functionality that you offer. You're going to win on the user experience. So a lot of people are starting to embrace Agile delivery because it does deliver ultimately a better user experience. So if you know anyone who is in Agile at the moment, they might be in a different industry, might have done nothing in mobile. I think it's definitely worth sounding them out about moving into that area. Payment and contactless experts, there's not enough of them to go around at the moment, and essentially these people are in a great position at the moment where they can pick and choose the jobs they want to do. So it's very important that you maintain as close a relationship with these people you can, because especially over the next 2 years, there's going to be a lot of growth in payments, a lot of investment in payments. I think longer term, we're going to start to see new technologies emerge. We're going to start to see more use of augmented reality, more use of location-based technologies. But in the short term, there's so much fear around payments. There's so much fear about losing their revenue from payments that people are just attacking this aggressively. And we know Lloyds are going to be doing a lot around the Olympics, and that's going to continue over the next couple of years. So big data, we hear a lot about data, and banks have traditionally, and even retailers have traditionally been very poor at utilising the data that they have on their books. And it's really a case of they never really thought about commercialising that data. So when Google came along and said, we're going to start using this data to make money off it, banks initially thought, we don't want to do that, our customers won't like it, we're not in that game. And slowly they've realised that they need to be in that game. They need to start using that data to their best abilities. And banks are already starting to appreciate data. So traditionally data was something, or MI or reporting was something that was de-scoped from projects. It's now starting to be a core part of the scope of projects. And people are appreciating it. And there's benefits and business cases that are being built as we speak around how this data can be better utilised. Developers, this is an obvious one, but I think interestingly it's developers that aren't just iOS or Apple. So we're seeing a big growth in Windows. I am starting to feel like maybe even BlackBerry could do something again. And I think those types of developers are going to be making a lot of money over the next few years, because as people get to a certain level of maturity around their iOS banking app or their iOS shopping app, they're going to think, where else can I get more customers from? Where else can I attract a bigger user base? And generally people go to Android next, but soon that will be Windows, BlackBerry as well. And the thing here is that people are starting to appreciate the fact that mobile's not going to go away. So that initially when people took their first tentative steps into mobile, they probably didn't invest that much. They couldn't get their board to approve or quite buy into the whole concept of mobile. That's disappearing. And people are now starting to invest properly. It wasn't just a tactical iPhone app. It wasn't just a tactical initiative to get something out there in the market. It's something that's going to be here and around for the long term. So we're not going to cut corners anymore. We're not just going to deliver it for the iPhone. We're going to deliver it for as many platforms as possible. And Lloyds did this. They had a strategic view that they were going to go to market with a ubiquitous service, and that's what they launched. Some of the other banks are launching for iPhone and BlackBerry and Android only, but over time everyone will have a service on everything. There's no doubt about that. Operations and support. So again, linking to that sort of mobile is a little bit of a tactical initiative that we need to play with. A lot of organisations didn't think through the operating model and how they were going to support this long term. And this is a traditional byproduct of sort of projects done in the haste of competition. So a lot of organisations are now starting to say we actually need a team to sit around and look at our MI, manage our customer complaints, ensure that we have the right capacity, linking back to the RBS thing David was talking about, ensuring we have the right performance capacity in place. All these different operational overheads that were initially not considered. And there's going to be a lot of people who may have had operational experience, may have worked on big internet banking platforms, etc. They're going to be perfect for this type of role in mobile. And finally, but I think most importantly, both of these industries are embracing user experience design. And if you think about when banks first moved into the online banking space, it was the first time that actually delivered a consumer-facing piece of technology. So they had, green screens for their branch staff probably at that point, which were the old sort of computers. And it was the first time that actually had to build something that a customer was going to use and interact with, and they didn't know quite what to do with it. They actually just generally replicated the form filling or layout of the green screen with a few different bells and whistles to make it look a bit better. But over the last 10 years, people are understanding and appreciating it. And it's not just people who work in this space. It's every single person now knows. Everyone knows the difference between a good aesthetic application and a crap one. And it does make a difference on the performance of the channel. So I've spoken to banks who I know have a poorly designed user experience, and they might get 10 to 15 logins a month per customer into their mobile service. Whereas a bank that has a more compelling user experience will get well in excess of 20 interactions with that service every month. And this user experience is starting to undertake big investments. So banks would sort of start using maybe a user design house or a digital agency to develop a sort of compelling experience. But they're starting to think about how they can bring that in-house, how they can have their own user experience experts working day in, day out with their team, rather than someone in jeans telling them everything but not knowing anything about the underlying bank system. And that's the complexity here, because a lot of the user experience people that banks were working with who came from a design agency background didn't actually understand the underlying complexity. And there's no point trying to design something at the top if you don't know how it's working underneath, because it's just not going to hang together. So user experience is going to be a growing part of where banks are investing their money. So ultimately, I think where we end up is mobile is changing the face of banking and commerce. And off the back of that, there's going to be a lot of opportunities for people to move into this industry who have the soft skills, not necessarily the hard skills, but the soft skills that mean they can adapt to mobile in a short time. So I think it's important you start to sort of reach out to that network of people who may have been doing this similar type of role even in different industries, but have a passion and an enthusiasm for mobile, and also an expectation that it's a career that they know they can do and do successfully for the sort of next 10 years. That's all from me. Thank you.
Thank you. I was getting all excited about getting involved within the industry. A stylist, pioneer and juggler. I think that rules out you and me, David, doesn't it? Yeah. So is there no hope for anybody who's over 44, slightly over 44?
No, there is. No, there is. I think to be, if I'm going to be totally blunt about it, there is a challenge. If you, I'll be honest. I have met people who tend to pretend that they understand mobile, and it's really a case of people who haven't really grown up with that technology or utilise it as much as sort of a younger generation does. It really is something that people are using. I think I saw a stat 150 times a day. And I think until you appreciate that and you understand how frequently people are using it, it can be difficult. And that's the biggest transition. It's not about your age, it's more about how frequently you use it yourself and that you appreciate the technology.
Well, you're right, my daughter who's 11, I stupidly have got her a BlackBerry. It was a spare phone, and have been charged. I've now got an all-inclusive, text as much as you like. In a month, she did over 1,000.
It's amazing. I think.
1,000 texts.
I know, but kids are growing up so fast. They are getting their first mobile at 10, and I actually think there's a big opportunity for banks to target and retailers that space where kids are getting their first phone at 10, but not establishing a bank relationship to 16, and that's the gap that I was worried about in terms of where Google and those guys can start to attack.
Well, it's interesting actually because the IT survey did point out, the CWJobs IT survey, that 62% of IT professionals disagree that demand for m-commerce platforms is a temporary business requirement. So in other words, people think this is not just a passing fad, that this is actually going to stay around for a long time. And with the younger generation coming up as well, this is going to be central to everything we do.
Exactly, and that's, if you think about anything that you did when you're a child, you generally have a close affinity to that when you get older. And I think this is going to be especially the case with mobile, and the brands that you're using. Your daughter, for example, that could be one of the first big brands that she's built up a relationship with. She built up brand equity into the BlackBerry brand, and there's no doubt if BlackBerry, they've been able to actually build up a decent profile amongst that consumer base at that age because of their BlackBerry Messenger service. And I think that could be something that actually keeps them in the game, because they have been suffering from a lot of setbacks over the last few years, but they've got that sort of core group of sort of 14 to 18-year-olds who are actually using BlackBerry Messenger and therefore are comfortable using that brand.
What's interesting is who actually owns the customer, who owns the experience as such. At the moment, banks are up in front at the moment, although I don't think they've probably put in the amount of effort that, say, other industries have, whether it's your PayPals, your Googles, who have been nimble and quick to get into this space. And I'd imagine whoever owns that customer experience in the end is going to win. So bizarrely, the government want to break up all the banks. This would they don't need to. They just need to send in the mobile tech and social companies who are going to do it for them naturally.
Yeah, and I think what we might even start to see as well over the next few years is banks acquiring small technology houses who specialise in mobile. And you see that going on in other industries. There's a lot of acquisition and takeovers. Banks have the money. I think they're going to have the intent soon, because it's just going to be too risky if they don't. And that's a really quick way for them to get up to speed in terms of competition with these other players.
Yeah. Do you have a question? Yeah, gentleman there, very good, hand up straight away. Good morning to you.
Hi there, it's John from eSynergy. For the consumer itself, where do you think our, say, money will be coming out of our accounts? So for instance, you buy, the Jane was it buying a TV, will that come directly out of our account, and will there be a fee, say, with Vodafone, or will you get a statement on Vodafone saying it's cost you $6.99 because you paid for the TV?
Yes, so the telcos want to use the sort of already established billing services they offer. There will be charges, and I think I remember even when I was young, I never thought about the whole payments infrastructure when I was a kid, and how there's money. There's every single transaction that's done, someone's making some sort of cut out of it. There will be, of course, money around that. I think the fear for banks isn't necessarily just about the money. I think obviously you're always going to have some sort of bank account, and even though people are setting up a lot of digital wallets, it's going to be you transferring money from somewhere from your bank account. But the fear is about losing that whole relationship And once that relationship starts to disappear, these other players who are building their relationship with the customer can then take the next logical step and actually build their own sort of banking infrastructure, their own bank accounts. And I think it's easy to forget that actually a lot of these players actually have banking licenses as well. So Apple does, I think Google does as well. And I think it's just a matter of time before they take that step into becoming more like a bank if they think that there's money to be made. I think the thing as well is that these organisations can do it in the flick of a switch. It's just that their strategy or their mindset is not totally on this at the moment. And as soon as it is, we could see a rapid change in terms of how and where and why we bank.
Very interesting. Great question. Any other questions that we've got this morning? Lady there, hello there, good morning to you. If you just get the microphone, just keep your hand up so we can see where to put the mic. If you could pass that along, that'd be great. Thank you.
Hi, I was just wondering how you mentioned earlier recruiting people that come from sort of more innovative industry sectors opposed to just finance. How successful and how good were the banks that you worked for at recruiting talent from outside of the finance industry?
Terrible. So,
very good question.
I think the first thing is a lot of banks still haven't got into that mindset. They're always looking for someone with experience. So first it was always they had to have banking experience. Now it's starting to be more that they are accepting of these other industries, but they're still big established industries. I think the thing for me is that the startups are getting the best talent and they're not paying them very well. So for me, if I was a bank now, I'd be going in there and saying, Mr. or Mrs. Developer working in a startup who's getting, 50 grand a year, you can come and work as a contractor at a bank and get this amount of money. I'm sure it's not going to be the thing you want to do forever. It's not going to be as exciting maybe as the startup you're at. But there is going to be a segment of those people who are going to be enthused by the money, but also because they know that banks are investing heavily in this space. I saw, actually, when I was at RBS, they started doing a bit more proactive targeting of that type of group. They set up a sort of little portal website where they interviewed some of the more younger members of the team who probably create more of a direct relationship or appear to have a direct relationship with that type of base. I think it's a challenge, but it's a challenge that they need to embrace because it's so much opportunity there, and it's purely about the fact that these people have the talent, but they're not getting as rewarded as they could be if they're working in the finance industry.
But that's a very interesting conversation. Would you say that's indicative not just of your organisation you've come from, but of the other major banks as well, that they've got that similar mindset that, we like the traditional way of doing things. Do we have to embrace the new way of doing things? It
is. I think if you look at if you walked around a bank, there would be a lot of that. But thankfully, in the mobile team or the digital teams, there is a little bit more of that innovative thinking and acceptance of the fact that you need to get people out of these businesses. But yet, in terms of looking at the bank as a whole, there is a very antiquated mentality around bringing people on with experience.
I think one of the interesting areas is suddenly it's SMEs. It's opened up a window of opportunity that before was shut very much to them. You needed substantial funds, substantial backing, and quite a sizable workforce. But this is very exciting, particularly for SMEs. And we've seen a whole raft of apps coming out. Some of them useless, some
definitely.
of them very, very good indeed. But I think this is where suddenly the SME can play a major part, both as in the consumer world, but also adding value into this area. What's your take on that?
I was going to say, so you got a lot of the stuff and the investment is in retail, but there's going to be equivalent set of banking applications for business. There's a lot of work starting to happen in that space. Then you've got your sort of wealth clients and how you can facilitate banking through a mobile there as well, even though a lot of them like to have their sort of run-around guy doing the stuff for them. And then there's insurance, stockbroking. There's so many actual facets of the bank. And that's what I also mean around the way we work. There's also a lot of internal app development happening. So not just consumer-facing, but it's how you get information to senior people. So people are building apps around reporting. So the executive of an area can get a report by opening an app on the latest stats for branch numbers in his particular area. So there's going to be not just development for consumers, but development for internal productivity as well.
And David was talking about the legacy systems. How much is that holding back your world exploding quicker than what it could do? And is that going to damage the reputation if the legacy systems aren't sorted out, so you have that real time? Could that damage the way mobile's going? Or as consumers, are we happy to give up our freedom? Because you talked about, people are happy to, is it gamification?
Yeah.
To me, that's quite an invasion of privacy, but for others, maybe not.
So the first thing around legacy, definitely, I think I've always found that you have to make compromises on the absolute pinnacle design or solution you want to deliver because of legacy. Probably to someone who's outside of that or using that app, you won't notice that you think it's a great app or it's working well. But in terms of taking it to the next level, it does make it difficult. And I think there are some banks starting to look at real time, but it does cost a lot of money, it does take time, and banks are nervous about doing that. And it's a difficult one because you're investing in mobile, you're investing in legacy, you're investing in a lot of different things that all ultimately need to hang together, and they can be very complex projects. And so far, most banks have just bolted on their mobile service on top of online or their existing sort of processes. But to take that to the next level in terms of matching up with this new competition, they're going to have to do that. And it's interesting because most people now don't compare their mobile service with other banks, they compare it with the other apps they use. I think a few years ago, people tended to overappreciate if a bank did a mobile banking app. Today, they're underappreciating it because they're comparing it to Facebook app or Amazon app or etc. The second part of the question,
gamification. And also that intrusion of privacy. I don't know about you. Are you happy for your privacy to be invaded, for people to know where you are, to put an offer for you? Just an example, I've been getting quite a few emails from lastminute.com saying, we see that you've been looking at our website. And I think, no, I haven't. And my father, who comes around and helps me looking after the children, I said, have you been on looking at Last Minute? He went, oh, yes, I have, yeah. So, every day, because I've been getting emails from them saying, we see you've been interested in a few entertainment offers. How about this for an offer? And for me, it's going, actually, it wasn't me. It was my father who was just having a nose around my computer. Am I just of a generation that it likes my privacy?
No. I think there's different segments who have different views on different things, and I think that probably tied into the legacy thing as well. It's very difficult for a bank to offer a customised service to different customers, and you'll notice that no matter your age, no matter your income, if you're a retail customer, you're a retail customer, and you've got a very similar service. So it's about actually giving that flexibility to you as a user, or basing it on what they know about you, so that you don't receive an email every day, or if you never click on that email, that the bank gets the hint that you're not checking this stuff and stop sending it to you. So it's about getting more sophisticated there. But it is a very fine line between getting the right level of communication and not. But there's no doubt banks need to start communicating, because for years, the only time a bank communicated to you was when you were in trouble. You might have missed a bill or something. But now they've got this great tool in your hand and things like email and alerts and notifications that they can start actually communicating to you about positive things. I think ultimately people actually put up with a lot of crap if they're getting a decent offer or decent something in return for looking at those emails.
The other area of interest is augmented reality. I haven't heard anything mentioned about that. Is that a space that we're going to see growth in and potential for recruitment going forward?
Yes, so I think a lot of people might have seen there was a lot of press around the Google goggles, the Google sunglasses.
Is anybody wearing a pair?
Banks initially did augmented reality in terms of location based, so you would hold up your phone and it would show you where the nearest ATM is or the nearest branch is. But I think invariably, as people do adopt, and it might be a few years away because of the cost of it now, but they start to adopt their sunglasses, wouldn't it be great to see your bank balance as you're looking at a product? So the proposition I brought up earlier, where you're taking an image, when you're taking an image of a TV, it would actually just appear overlaid on your sunglasses, the price of that TV. That would be cool, I think.
Okay. It all look all wearing the same sunglasses. They go.
Yeah.
Great. Any other further questions? Just wondering if the CWJobs team, anybody wants to come in, because we've seen some overarching themes, haven't we? I mean, you've given some overarching themes around banking technology, David, and drilled down further into some really good ideas, actually, of where those skill sets, particularly when you talked about the soft skills and those key areas that people should look into. So, Richard, would you like to say, can you just get the microphone to Richard over here? He's just down there. Lovely, Richard.
I think it's really a question. It's just more an observance of seeing the presentations and everything, because I try and keep as close to things as I can because of what we do as a business. And two things that have stood out to me. One was in the first presentation, when I think there's possibly, for recruiters in the audience, there's I was trying to put my recruitment hat on. There's a possible sort of like a Levi Strauss opportunity, I think, in terms of security, because everybody's going into commerce and platforms. Now they're all going to have to be secure, and there's going to be a lot of legislation coming through on it very, very soon. And so I think there's a thing about, with Strauss making the most money out of the California gold rush, although he sold jeans. I think there's an opportunity for recruiters to make a lot of money recruiting security specialists around this subject. And the second thing, which bears out my own very recent experience of working in the Agile environment, I recently was very much involved in a project using Agile, and historically I'd been involved in projects that were long drawn out sort of Hollywood blockbusters where you only got to see the finished thing right at the very end, whereas Agile was a much more organic thing and changes as it goes along, and it was a much better experience in my opinion. But also people with those sort of skills and the softer skills, I know Michael mentioned about that, and we found as an organisation the type of person we're hiring has changed a lot in the time that I've been there, and we do look now on the technology side for people with softer skills in terms of communication skills, I suppose, but also people that understand the commercial imperative of the business. So I think going are the days of the techie that just sat in his dust-free room tapping on a keyboard, and I think organisations, not just in banking industry but in general, want technologists who can interact with the business in a true sense and be part of that. And you see now that IT directors obviously being on the board of companies, and even in a couple of occasions recently becoming CEOs of organisations that are not technology companies, and I find that very interesting. And certainly that's an area that I would look to focus on if I was in the raw recruitment space.
Absolutely, because that trend at the moment tends to be from your CFO or maybe marketing that gets that CEO position, but not it's changing, isn't it?
Absolutely, it is changing, and I think guys like, Steve Jobs, and they blew all that up, you know what I mean? And where it was obvious they could be the CEOs of the arguably the most innovative company in the world, So that old argument about IT directors can only look after IT it's been blown up.
Yeah. Richard, anything you want to say? Sorry, Richard, not Richard. Yeah, you're looking.
No,
Got you confused there, Michael.
I totally agree, and I think some of the more successful banks over the last few years globally have had sort of CTOs, CIOs become CEOs. And it's because there's so much, the bank sits on a big bunch of technology. Everything it's based on is technology. And definitely they have to have that commercial acumen, but that's a skill that you can have your CFO, manage. And they are having a lot of success. One of the big banks in Australia, Commonwealth Bank, moved to real-time systems and has delivered a bunch of award-winning services over the last few years, I think off the back of having an ex-technology guy running their business.
Just final thought from you, Michael, is we talked about reskilling. People are obviously up for reskilling. They want to know more about mobile. What is the best way to do it? Because let's face it, our universities and colleges, especially universities, are going to be slow to get a grip on this, and the stuff that they're teaching is probably all out of date at the moment as it is. So what is the best way to reskill here to really get a true understanding of the mobile world?
I was actually having a chat with someone the other day. I think there is a gap, actually. I think if someone built up, maybe CWJobs, could build up a training area, upskilling people, I don't really know where people would go. I know there are a few people who work in the training space that might have traditionally done business analysis or project management type training, and they've actually called me up and said if I'm interested in doing some training on mobile. But I do think there's a gap, and because there are so many people wanting to get into this space, I think there's an opportunity for someone to take it.
David and I, we could do that, couldn't we? Because we're not in the other category. Yeah, we'll sort that one out. So thank you. Michael, thank you very much. It's been an absolute pleasure having you. Michael, everybody, thank you. Thanks very much.